All right, so let's start all over again. I try to be here early, try to be on time, so that when I start the video, I don't have to be looking like a schmuck, you know, talking to people as they come in. All right. So did everybody get their donuts? Okay. I may need to split up your group, okay, because you have 4 and I have a new person. Okay. And then what's your name?
Tom.
Tom, you're gonna have to come up here and get all the handouts and stuff like that. Okay. So just start grabbing a bunch of stuff right here. Just grab all this stuff. One of all of this stuff right here. Okay. All right. So what we're gonna do today is I'm gonna go through all the stuff that we went over already, and I'm gonna go through the course website. So you should pull up the course website. All right. So as I walk through it, and then every class now, when you come in, first thing you need to do is to go up onto Yahoo Finance and start finding out where the Dow Jones Industrial Average is trading. Is it up or down? And see if you can tell me why. Okay, what's moving the market? Go up and find a barrel of oil where that's trading right now. Is it up or down? Moving up or down? And why? Gold prices per ounce. Where's it trading? Is it up or down? And why? Where is the 10-year Treasury yielding? 10-year Treasury bond, okay, is the U.S. government has issued a 10-year Treasury bond to finance the debt, the deficit, okay? And the 10-year Treasury yield, the interest rate on the 10-year Treasury yield, is the index interest rate that is used to price all car loans, student loans, mortgages, you know, all the borrowings that are done usually start with the 10-year Treasury yield. So is it up or down? And you can tell me why it's moved up and down. I'll help you, but I need to know that data. And I need to know the dollar to the pound and the dollar to the euro. Okay. So you'll need to come right in, go right up to Yahoo Finance, get the data, start doing the research. Maybe you can do the research before, start tracking the markets. Okay, maybe download an app or something that has all that stuff and start following the markets and start listening to the news. Okay, because the news moves the markets. Okay, was there any news today?
Tesla had a little bit of a comeback, and China's markets and the Singapore markets are continuing to go down because of the coronavirus.
Yeah, exactly.
Small at this point, but they're projecting bigger. They're projecting even through Dubai 0.05 to 0.03 within the next week or two.
Yeah. They actually were making progress. The market started to rally because they thought the coronavirus was basically being contained. This morning it came out that basically they were mismeasuring the infections, and there's a lot of people out there that are actually infected but don't show any signs. So the actual number of people that are infected by the coronavirus is probably 10 times the reported amount. So we're not talking about 20,000. We're probably talking about 200,000 people. Okay, so that makes it, you know, more of a pandemic situation, and we all need to actually be careful about that. And there should actually be more discussion on that, I think, here on campus and on major universities that have a lot of foreign students and people who have traveled and are in contact with people who may have come back from China. I think there needs to be more discussions about that. Are you guys getting any news on where to go and how to treat anything, or the flu or colds or any of that stuff?
There's been a few emails from the Health and Wellness.
Okay, good. I just want to make sure. Just be really super careful. Okay. So what I'll do is I'll go over everything. Make sure you do that research. Start doing the research. Again, if I'm saying things in class and you don't understand what I'm saying, then get on, you know, the internet. Start looking up the terminology. You know, I've heard that the book becomes really useful in understanding what I talk, how I talk. Some students try to get through school without reading the book. That's totally cool, excellent. But you know, other students, you know, find it frustrating to listen to me talk because they say I talk over them. But then the students, they tell me that they started reading the book and they started understanding what I was saying. So, you know, two things, right? But you have computers right there. I mean, that's why I got the computer lab for the class. So you can jump online, start doing the research, figure the stuff out really quickly. Again, you guys are the most powerful generation on Earth. You basically have supercomputers in your hands. you have tablets, laptops, you got computers. You basically, are extremely powerful, your most powerful generation, and you're totally networked, to hundreds, thousands, millions of people, through social media. It's pretty unbelievable, actually. So, get the resources. You're gonna be in these meetings with these corporate people, and basically you're gonna be involved in the meeting. You're gonna have access to the intranet, and the internal documentation, and the knowledge base, and all kinds of information. And the person who can retrieve that information and give us the information fastest, we can start to put together the solution very quickly and actually derive the solution right there within maybe 20 minutes or 2 hours, instead of 2 days or 2 weeks or 2 months that it used to take us to be able to solve problems. Now we can do it in basically 24 hours, maybe 2 hours, because we're totally networked. We have access to the information. So the more comfortable you are in getting the data, getting the information, participating in the conversations, adding value to the conversation to derive what the problem really is, and then coming up with a solution, and then being in charge of executing on that solution, you're gonna be extremely successful, okay? And you just do it over and over and over again, okay? So the process is repetitive, but the challenges and the problems may be unique, but the approach is the same, okay? And as you get better and better at it, it's pretty awesome. So you know my office hours. You have some examples of the memos. I'll do that. Did you guys fill out the intake form? Awesome. And then don't forget, you can put them up here at the end of the class. You guys got the notes to the pre-test, correct? And I'll show you where other resources are available. And I'll go through the pre-test today at a very high level. And if you're really smart, you take a bunch of notes as I'm going through it, and then you go back and you refine it and improve it and fill it in. Okay? So I'll even give you a first pass on it. I'll go over it again, but I'll go through like really quick first pass, okay, on it. You got the exam, which I'll go over pretty soon. What else? You got the book, memos, office hours, syllabus, quiz, pre-test. Awesome. Okay. Case study. I like to bring in, and then the extra credit, okay? And again, for the homeworks and the extra credit, the philosophy, and I was talking to one of my students this morning in class. He was going, you know what, I started looking through the homework, and you provided me with the solution, so what I did was I studied the problem, and then I looked at the solution, and I figured out, hey, that's how you do it. And then I started moving through. Well, at some point, I was like looking at the problem, looking at the solution, looking at the problem, looking at the solution. All of a sudden, it started clicking in my head. As I started reading the problems, I kind of knew what the solution was going to be. And then, so the way I do that by providing the solution, some students just, they're cramming, right? It's like I ran out of time and just copied the stuff over. I'm not going to learn anything. But if you give yourself some time and you study the problems and the solutions, it eliminates the cognitive dissonance that you have within the frustration of trying to figure out the problem and then checking it. And if you got it wrong, you got to go back and you got to correct it. But if you look at the problem, study the solution, and start learning problems and solutions, and then moving through more problems, you're going to learn more. So it's basically a manufacturing approach to consuming knowledge in a more efficient way in a production environment is the way I look at it, okay? So that's my theory. I think it eliminates some of the frustration and the cognitive dissonance associated with learning, and I think if you do it that way, you're gonna learn way more, okay? And it eliminates a lot of the frustration. And when you lower the stress levels, you remember more, okay? That's why I'm a doctor, right? Because I understand, the psychology around a lot of this stuff, okay? So case study time. So here's an example, live case study. I've heard that students like to hear stories. So here's a quick story. So I was approached by a guy that I knew. I've known him for about 22 years. He's like one of the top commercial real estate leasing agents. He's a broker in San Francisco. Over the last, I would say 10 years, He's been focused on working with life science companies, like Pfizer and GlaxoSmithKline and Roche and those types of companies. And I didn't know much about the life science space. I don't know, do you guys know about the life science space? I mean, it's unfreaking believable. Billions and billions of dollars are raised in the venture capital area and plowed into scientific companies that are basically solving, you know, incurable diseases like Crohn's and diabetes and, you know, my sister's working on Hodgkin's lymphoma. I mean, it's amazing. And because of the mapping of the genome project and all the DNA, they can now basically, these scientists, coupled with data science, can basically cure these diseases very rapidly. And these large biopharma companies will basically buy these startup companies for hundreds of millions and billions of dollars. It's freaking unbelievable. So it's the convergence of basically biological, biopharma science with technology, which I find extremely exciting. So he came to me and he said, you know, Professor Souza, or Dr. Souza, he said, I'm really, you know, impressed with your background, not only the academic side, but all the work experience that you've accumulated over the last 25 years, and that you're affiliated with the universities and you're teaching students and all that stuff. He said, what I want to do is my company, BioCube, okay, basically buys, converts office buildings into wet lab space, like a WeWork of lab space, where a scientist can come into a collaborative environment, basically rent the equipment, which is extremely expensive, and to be able to conduct their experiments in a collaborative environment in an incubator, okay, and then position themselves to basically be bought by another company to then transfer, you know, those scientific cures and those things. And I said, that's really fascinating. He said, I want you to write a paper. I said, okay, I'll do it. I'll do it for $10,000. And he said, I'll give you 5. And I said, okay. Because right now I've put so many hours into this thing, I basically made minimum wage, but I'll tell you why I did it in the first place, because I thought it was extremely important. And he said, I said, you know what we'll do too, is we'll write the paper, and then we'll have you guys as co-authors on the paper, we'll publish the paper, and we'll present the research. We'll have your associate present the research at the international conference at the American Real Estate Society in Florida in April. And he said, that's unbelievable. So then they were kind of going, where's the paper, where's the paper? He said, we need the paper because 2 senior executives from the company are coming out yesterday because they want to start investigating to see if they should launch a real estate investment and development program in the hundreds of millions and maybe even the billions of dollars, specifically geared towards life science space, lab space, incubator space, first in the Bay Area and then maybe Seattle and some of the other, Boston, maybe other areas where these life science companies cluster. Okay. So I thought that's really fascinating. So what I did, because of this meeting that was coming up, it kind of pushed me to get the job done. So I knew about it at least 2-3 weeks in advance, just like you guys are totally procrastinating, for the first week. And then the second week I spent 4 days going up to the internet, pulling down all of the research reports from the consulting companies, Bain, McKinsey, PwC, E&Y, Deloitte, all of the major brokerage houses, JLL, Cushman, CB, all of those companies. And then I have one of my other students where she's pulling down all the academic research papers around, why life science companies cluster in certain locations around the globe and in the United States. So I did that, and then once I got all the data dumped, I put them into categories within folders, okay? And then I pulled up a PowerPoint presentation, and I created an outline based off the top of my head. And then what I did was I started to populate it all and go through each individual folder within the outline, basically transferring over the key data that basically supports their business model. And that took, the downloads took me about 4 days. Writing going through all of it took me about 2 days. And then putting the deck together took me a couple days to make sure that I had this. So before I went into the meeting, I had 2 decks. I had my business card right here. I had my suit, my jacket on because they were from Texas, and the boys from Texas get dressed up just like the people from LA like to get dressed up. Us here in San Francisco are a little more relaxed because of the tech stuff, but I knew that, you know, the heavy hitters from Dallas are coming, and everything's big in Texas, right? So you gotta show up, you know, with your best foot forward. So I looked up everybody who was coming to the meeting, looked at their LinkedIn profiles, learned about where they went to college, you know, their educational background, looked them up on the website. So I learned everything about them. So that when I walked into the meeting, I went right up to Tom and I said, "Hey Tom, really nice to meet you." And Tom's going, "Hey, I'm Tom, blah, blah." So Tom, really nice to meet you. Steve, good to meet you. Hey Andrew, really nice to meet you. Jeff, good to see you again. Peter, great to see you again too. Hey David, how are you doing? Gab, how are you doing? Good to see you again. I knew everybody by name. Looked them straight in the eye, gave them the handshake. So they knew I was totally serious. And then I sat down at the front of the table, right? I had my stuff. I said, "I brought you guys, you know, to the decks. I'll walk you through the deck. You can ask me any questions. We can make this totally casual. But I think the information that I put together is really compelling for your business model." And right then and there, he said, "Yeah, we're really interested, you know, in doing this program. We want to do it. We're really interested in what you have to say, not as an economist just reading off numbers, but as a strategist and a consultant that has, you know, 25, 30 years of experience that understands, you know, how to pick markets and how to invest in real estate, you know, and why this market is so unique and the opportunity is so huge that these guys need to get involved in this." So I kept open. You guys can look through. I don't know, do you guys have any copies? More than happy to share the copies with you so you can kind of see the quality of the deck. My problem is I'm in such a short time crunch that I put the deck together, bounded it, and then they found a bunch of errors in it, so shit, I had to like throw out the bounded ones and then reprint them again. So stupid Professor Susan needs to like have attention to detail. But I did it. So I got the 2 principles there that's totally laid out. Clear cover, black back, just like the decks that you're gonna do. And then totally laying out, you know, got my disclaimer because I don't want to get sued. Then just, you know, the goals, objective of the presentation outline, focusing on the real estate first. Kind of an introduction with all the key high-level takeaways. Then we got into, you know, why the San Francisco Bay Area that ranks at the top of life science clusters, not only globally, but in the United States next to Boston. Okay. And then I just started building, you know, the case, and then at some point, the data was, I had covered enough, you know, high-level data points where he was convinced, you know, this is what we want to do. I said, you know, just started moving, they started asking me questions. I gave them real estate advice, I gave them economic advice, deal structuring, just everything they needed to know from a consulting in a very casual environment. They loved it. They invited me to Dallas to present to their investor group the presentation. Ding, $5,000. Ding, maybe some more consulting work. Ding, maybe I'll move on to the life science, you know, brokerage side of the business, and I work with the team to source and underwrite transactions for the investment fund. Ding, maybe they invite me over to become their director of research and head up all of the real estate research out of the San Francisco office for the national firm. That would be the ideal, right? Right? Because it's career, it's money, right? And stature and prestige. So I was pretty happy. They were really happy with this. They knew some of the people that I knew. And then the one guy went to Harvard, you know, worked for a company called Trammell Crow out of Dallas. I knew a couple of those guys, so I dropped some names. And then the other guy went to ASU. So I'm going to hook him up with the executive director of the real estate development program at ASU, so we can start sourcing talent out of ASU's master's program in real estate. So total value add, 45-minute presentation. So I thought it was pretty cool. Okay, so I thought maybe you'd be interested in that stuff. Let's do the pretest. Okay, so I'll walk you through, take a bunch of notes. But I already gave you some notes. And then on the course website, so I'll do this kind of interactively since I've already done this. So I'm going to post the video logs because I'm going to record on all of the courses. So if you get sick or your mom comes from out of town or you got a baseball game or something like that, you can review the videos. Okay. Attendance is a big deal for me. It shows that you're engaged, you're interested. And then when you don't show up, I'll try to track you down. But if you track me down, you let me know, that I don't have to worry about you. Okay. So communication is really key. Okay. And you really need to be good communicators if you want to be leaders. Okay. You got to let everybody know. You got to bring them along. I find that there's some lack of communication with some students. Other students are great. They're really comfortable in building a relationship with me and then having these conversations. Okay. And I do enjoy building permanent relationships with my students. So these are like the course logs. And then some stuff on product innovation. The lectures, I took some pictures and posted them up there. Anybody that wants to do the SIE exam, which is the first half of the Series 7, which is the registered rep, that gives you the license to sell stocks, bonds, and option contracts. A lot of people are like, I'm in marketing, I want to go work for Google. Who doesn't want to work for Google? I mean, you're competing against the Stanford and the Towles and the Ivy Leagues, in marketing. Who are they going to hire? So it's extremely competitive. But you can do marketing at large financial institutions. Same quality, same techniques, same brilliant type people, but in the financial institution space instead of the tech space. Maybe you go over to the financial institution space because it's easier to get in, and then you migrate over onto the tech side at some point. Or you go tech, you get burnt out, you want to go onto the financial institution side. The only thing that matters is you get to where you want to go. Sometimes it's not a straight line, okay? So you got to be thinking tactically and how you make these tactical moves to get to your strategic outcome. The SIE, if you take the SIE and you apply for a marketing position or a position at one of these large financial institutions, BlackRock, Goldman Sachs, JP Morgan, Citigroup, Schwab, the list goes on, your resume goes to the top of the heap because you already passed the exam that basically you would need to do marketing at a financial institution that's involved in registered products, selling registered securities and stuff like that. So you're already there, you're already telling that you already know, some of the finance. So it makes a big difference. And if you can couple that with some knowledge and maybe some advanced Excel skills, H lookup, pivot tables, how to do macros, how to do, tables and graphs and make them look pretty, you'll be able to add significant value, to those positions. And if you have the R in Python too, you get into the top 3 pretty quickly. Okay, so that's that. And accident insurance I got as our sponsor for that, so it's like $116, which is cheap, and it takes about a month to study for it. So there's the logs, there's the syllabus, statistical pre-test. Here's some notes on the statistical pre-test. Here's a bunch of reports, some statistical reports, resource materials that you can use to fill out the statistical pre-test. Okay, or you could use Google or Stats Books or whatever it is. So I'm giving you all the resources you need. Then the calculator manuals. If anybody's interested in playing trading games, where you trade $1 million portfolio, you pick a bunch of stocks, you trade them. There's a bunch of those in here if you want to go play around and learn how to trade. That's a really good place to go. Here's the in-class exam. I'll talk about that, the strategy around that, the solutions to the problems at the back of the exam, the extra credit, the solutions to the extra credit, the midterm exam, extra credit problem set number 2, solutions. What else do we have on here? We got all kinds of stuff. Let's see, pre-test, exam, solutions, so it's all basically kind of redundant, but, and then here's your PowerPoint presentations. Here, here's the homework solutions. Okay, so it's all right here that you need to do your presentations and then solve the problems and study the problems, study the finance, mathematics. Some writing resources are also available to you. Here's some review courses, you know, to jog your memory on macro, micro, financial accounting, managerial, financial statement analysis, econometrics, financial econometrics, quantitative finance, if you want to go as far as coupling the data science with the finance field. Those guys are hot these days in that approach. And we need more women in finance and more women in data analytics too, in the STEM area. The video review worksheet, I didn't hand that out, but we're going to do 3 movies during the semester, and there's a 2-page worksheet that you work through. We'll do Inside Job, I think that was like 2010. Charles Ferguson, basically a great award-winning documentary on the origins of the financial crisis and all the individuals that were culpable and guilty in basically causing the financial crisis, and how a lot of them basically walked away with billions of dollars and never were incarcerated. So it was a total sham, right? Basically underwritten by Wall Street and underwritten by the federal government and the agencies and the political parties, both. We're eating from the Wall Street trough. Here's the memos, some videos on the memos for training, financial product innovation video that's also in the syllabus. I'll go over that in a minute. Yield curve dynamics, technical securities analysis. Here's a lecture that I did if you're interested in listening to, you know, how I lecture and the type of presentations that I make to my clients. You can listen to, watch that. I think it's kind of interesting. What else do we have? Technical video. Well, here's the publicly traded stock analyses, report on doing financial institutional analysis. Some examples of the research reports, you know, that you're gonna, I'll train you on Mergent and how to export. I'll bring Sarah Mattel in so you can export the financial data, know where to get the financial data. This place is amazing. St. Mary's, it's got like, you know, Morningstar, it's got S&P, Value Line, Mergent, you know, all of these resources. I go to USF, they only have one. You know, that university's rich, and they only got one source. We got everything here, which is amazing. It's really cool that you guys have all of those resources. So that's basically the website. So it's a knowledge base, okay, that you can use for research purposes. I said I was going to do the pretest. I'll do it, and then let's go through the syllabus too. So let's do the statistical pretest. My recommendation is to be taking copious notes. You know, take notes and then do a quick note-taking through the pretest as I walk through it, and then go back and do the pretest and fill it in and add more detail. Okay? But I'll give you some of the solutions now. Okay? So the first question is on the law of large numbers. So why would we want to collect a large sample of standardized data? And then in the business world, you don't raise your hand, you just talk. And then sometimes what will happen is this happens. Somebody will start talking, and then somebody will start talking over the other person, and it happens a lot. It happens actually more often to women that are sitting in the conference rooms. There's always some guy, you know, that thinks he's like totally hot, and the woman executive is articulating the solution, and he'll just interject and start talking right over her or him. So it's like, excuse me, you know, let me finish my point, and then you can rebut. But give me a minute, let me just finish my thought. So you gotta be assertive to be able to shut those guys down, okay? To be able to have you be able to speak your piece. So there's some psychology there and some politics that you guys are gonna need to learn, okay? Because you're gonna be confronted or you're gonna get railroaded and completely bulldozed, if you don't, okay? So yes, I did mean that.
Even the S&P and the Dow Jones are kind of based on a law of large numbers in and of themselves. Dow Jones only representing a small number of companies to see how the market's going to affect your portfolio overall. Same with S&P and other markets.
Yeah, so you got 30 stocks in the Dow, which is a small sample representation of the overall economy. The S&P 500 is 500 the top companies, which is the benchmark that everybody uses when they build portfolios to benchmark their performance to see if they can beat the index. And then you got like Vanguard and Fidelity. They got the New York Stock Exchange Index, or they have other small cap 2,000 technology companies. So they have all kinds of indexes that they can create. So the bigger the sample, the more, and if the data, such as if we calculate the annualized return on the S&P 500 or the Dow Jones going back 130 years, that's a pretty large sample. So what will happen is you'll get a normal distribution, okay? And you'll be able to calculate the mean and the standard deviation, okay? And you'll be able to calculate, standard deviations from the mean and start conducting a statistical analysis to get information, from the data. So, large data sets, and then you're going to calculate an arithmetic mean or a geometric mean. Now, what's the problem with the mean and the arithmetic mean? What's the problem with that? When you calculate the average, what could be the problem? Yeah, exactly, the outliers. So usually what you do to correct for that is you're going to take the log, ln, log base 10, for each of the data pieces, each of the data, which will normalize the data. And then what you do is you take a 2 standard deviation filtering process and you get rid of the outliers. And then you convert the data back to its original form using an exponential function, and then you calculate the mean, the median, the standard deviation, and all the other statistics. So that's a data filtering process that you may need to do. You're all going to be dealing with data at some point. So if you have knowledge of how to approach data, how to solve data problems, then it becomes a little bit easier to work with the data team, to solve the problems to then, so you can do your marketing campaign or your production or whatever, your finance or whatever you need to do. So thank you for doing that. Geometric means are what we use to calculate geometric returns on portfolios, which controls for some of the outliers. It's a more accurate calculation, and it's a standard within the finance industry. If you're going to be reporting your portfolio performance, would be in geometric returns, geometric means. On page 3, you have the distributions, different data sets of different distribution characteristics. If you're going to be doing any type of simulation analysis using MATLAB or SAS or some other computer application where you're simulating thousands of observations from small samples, you got to plug in, what is the distribution of the data that you're simulating, okay? And so that the statistics that are produced from the simulations give you the information that you need to be able to make accurate business and let's say, finance decisions. So if you're going to go on and do an MBA, and you're going to be taking finance or ops, at Cal or Wharton or something like that, you're going to be doing simulations in any of the data sets that you're using. You got to understand what the distribution types are before you can start doing the statistical analysis. So I bring that in. Show me, give me the definition, show me a diagram, show me an image, okay? Because you'll remember that stuff. Cognitive imagery is really important. That's why I love mathematical functions, because I can memorize that stuff pretty quickly because it's cognitive. Right? And then you can train yourself too. I didn't think I was very good at math until I just started bathing in the math, and then I found out I was actually pretty good at math. So it's like, what do you know? And then for some people, we're all told that we're not good at math for some reason or another, so we have basically a psychological impediment going into learning math, which is horrible. So everybody really, they've already done the tests, everybody is really good at math. It's just the conditions in which you grew up in and what type of information that you were being fed. And if you had people around you that were encouraging you and telling you that you were good at math, you actually became good at math. If you were being told that you didn't need math or you weren't good at math, you weren't going to be good at math. So then you had to overcome it, which is a little bit harder. So it's, you know, psychology, you can psychologically train your brain to do pretty much anything, if you understand the power of psychology. So the mean, median, and mode are measures of central tendency. If the mean, median, and mode are clustered to each other, then you have really strong central tendency. And that the mean and the standard deviation and the other statistics that you calculate are going to be extremely accurate for predictive purposes. Okay? And that's the goal, is to be able to forecast. If you can forecast production, sales, revenue, returns, stock prices, earnings, all that stuff, will you be extremely valuable in the firm? Yeah, because they're going to ask you, what do you think? Can you forecast? Can you build the model? You know, how long is it going to take? Show me the back test. Show me the results. Are you confident in the results? Yes. Come make the presentation to the board of directors, the investment committee, and senior management, and give us the recommendations and tell us where to go. Tell us what to do, because you're the expert. Okay. Some of the distributions have skewness, either to one side, you know, positive or negative. You can correct for that, and I'll tell you how to do it. Kurtosis is the peakiness in distributions, and elliptokurtic is a messed up distribution, has a really fat tail. The distribution is skewed, and then it comes down, and it can have a fat or a really small tail. So it's all messed up. The elliptokurtic distributions are very rare. They're called black swan events. We had one in the financial crisis, and we had like the Great Depression, where you have these really fat tails on these really extreme events. They're really hard to correct for, but we can do it in statistics to clean up the data to get it back to some kind of normal distribution so we can run the statistics to get the information to make the business decision. Okay. Then you have histograms, stem, leaf, and box plots. Again, those are data visualization techniques to be able to look at the data very quickly and see normality and just look at a different way from just a graphic representation. There are other ways of data visualization that you need to conduct in your first steps before you start down the statistics. You know, you want to look at the data first, okay? And then start making decisions on how to clean it up to get the data where you need it to be, to apply the statistics, to get the information to make the decisions, okay? And the recommendation. And then the variance and the standard deviation and the confidence interval calculations. When I say standard deviation and variance, the first thing that should pop into your head is volatility. Okay, and the greater the volatility, the greater the risk. Okay, so the variance and the standard deviation are basically statistical measures of risk. Okay, and in the class we're going to use the standard deviation. We'll be taking the annual returns and divided by the standard deviation. We'll do the standard deviation divided by the returns. We'll calculate the correlation matrix, correlation coefficient, where you basically take the covariance and divide it by the standard deviations to get the correlation coefficient. So, and then if you take my investments class and stuff, you can really see where variance and standard deviation really comes into play in investment analytics. Okay, and show me the equations, and show me the definitions. And then the confidence levels in social science. There's 3 confidence levels, the 99, 95, and 90% confidence level that you use to be able to run regressions and test statistical significance. Not only the model, but also the individual variables, statistical significance, and the ability of the independent variables to predict the dependent variable. So you set the confidence level. Now in life sciences, genome, DNA, we're talking about hundreds of thousands or millions or maybe a billion data sets. The observations could be in the billions if I'm looking at stem cells and cells and stuff like that. So you'll use a 99% confidence level to test the statistical significance of the model and the independent variable's ability to predict the dependent variable. Now in the social sciences, we usually don't have that large of data sets. So we have to pull down the confidence levels to inflate the statistical significance of the independent variables. So we usually use 95, but sometimes we have to go down to 90 to pick up the influence of the independent variables, influence on the dependent variable. Okay, and usually in social science articles, in business and stuff, they usually report both the T statistics and other regression diagnostics at the 95 and the 90% level. Okay, I'm giving you kind of a crash course in statistics. The books, you got a whole thing on statistics. I like to bring a lot of that stuff up front so that when you see it again, you've heard it like 3 or 4 times and you understand. Covariance is where it's like an average. It's a calculation of the average variance, let's say, between two returns on 2 stocks. So it's like the average. And the question is, does the variance between the 2 stocks, do they covary together? Do they have high covariance or low covariance? Do they not covary that much together, or do they covary a lot? Now, if the 2 stocks have high covariance with each other, that means that the variance between them is really high. They kind of move, the volatility moves together. So you're not getting any diversification whatsoever by putting the 2 stocks together. But if I put 2 stocks together whose returns have low covariance, then I'm getting diversification and I'm diversifying the risk. Okay? The correlation between the stocks, I got 2 stocks with the returns. I got 2 stocks with perfectly correlated returns. I got no diversification whatsoever. But if I put the stocks together that have low correlation, maybe positive correlation, I'm getting diversification. If I put stocks in the portfolio that have no correlation with each other, I'm getting diversification. And if I put stocks together in the portfolio whose returns move in opposite direction, I'm getting pure diversification and offset of my risk. Okay? So that's how we think when we're constructing portfolios, when we're looking at these statistics, when we're doing that. So show me the equation for the covariance, give you the definition. Same thing with the correlation coefficient, and understand that the covariance divided by the standard deviations is the correlation coefficient. You just standardize it and then bind it between +1, -1, or +100 or -100. Okay? And then you need to go find in the book and maybe outside the portfolio standard deviation. Not the standard deviation, but the portfolio standard deviation. So it's a different calculation. And show me the one that has the covariance on the end, and show me the one that has the correlation on the end. And remember, if the covariance goes up, then the portfolio standard deviation and the risk goes up. If the covariance goes down, the portfolio standard deviation and the risk goes down. If the correlation goes up, the portfolio standard deviation and the risk goes up. If the correlation goes down, the portfolio standard deviation and the risk of the portfolio goes down. So I just answered those questions too. Okay? So I'm trying to answer these questions without giving you away everything. Okay? Because again, what I'm trying to do is not only teach you the finance, but teach you how to learn finance. And learning finance, you got to go get the answers. Get comfortable doing the research. Okay? And then the value of the regression equation. Well, regression is freaking awesome because it's the standard method to forecast. So regression is used to forecast. And if you can build regression models and you can forecast whatever field that your discipline that you're in, you're going to be extremely valuable in the company to be able to forecast production, sales, revenues, earnings, net operating income, and earnings per share, and which is going to flow right through to the stock price. Okay, at the end of the day, and that's what these people are focused on in most cases. There's 2 types of regression techniques. There's a cross-sectional regression technique, and then there's a time series regression. So let's say I work for a tech company, and they say, hey, we've only been around a couple of years, so we only have 8 quarters of data. We want to be able to forecast production and sales, and earnings per share, and the return on our stock, and return on equity, and all these factors, but we don't have enough historical data to run a time series regression. So could you please build a model and figure out the factors that are going to drive return on equity for our company in the future? Well, we don't have enough historical data to run time series. But what I can do is I can find those variables, standardize the variables, in periods, blocks of periods of time, and go get 100 companies similar to ours in our sector, get that data and run the regression on a panel of data, a panel of companies. And what it'll do is it'll kick out the coefficients, and then what I do is I put our forecast of what those variables are going to be, multiply it through, going to give you the ROE, the earnings per share, the return on the stock, using a panel of data, not time series. Then what I could do, since I already figured out what the variables are, after 10, 15, 20 years, I'll have plenty of quarterly data or monthly data, and I'll use the same variables for my company over time. Okay, so the ability to go back and forth between the two approaches is extremely valuable. I found that if I don't have the data, I'll run a cross-sectional regression, get the coefficients, do the forecast. So I use the cross-section as an interim solution until we get enough historical data to then run it in a time series fashion. Okay, that's not going to be in the book. Okay, and most professors aren't going to give you that because you have to be in industry to kind of know this stuff. What are the dependent variables? That's usually what the client's going to ask you to forecast, or you in your expertise within your certain function within the firm. You're going to know what's important: revenue, sales, production, right? Demand, revenue, earnings, net operating income, returns. So you'll know what the dependent variable is. Then the question, where do you get the independent variables? How do you figure that out? Usually what I do is I ask the people who want me to build a model, what variables do they think are important to predict, the returns of the production? And then I ask everybody in the company, that have experience, what variables they think drive production, sales, and returns. And then I go out and I read all these industry research reports, right, in the academic journals, from the scientific academicians that are published in the peer-reviewed journal articles, and I read through all that stuff, and I start to see that there's some consistency in the different variables seem to pop up over and over and over again, and then that kind of validates my model approach. You shouldn't have, in the tests, I usually use the F statistic, the T statistic, the adjusted R-square. I could use Durbin-Watson, I could use p-values, I could use, other types of values to test, if the regression model diagnostics are looking good. The regression models are limited to no more than 5 variables. You can't just let's have a party with variables and throw everybody, into the pool. You got to limit it to 5. And even when you have 5 variables, you're going to run into multicollinearity, okay, which is a big problem. So I'm building the model. I got 2 variables in my model that are highly correlated to each other and highly correlated to the dependent variable. Which one do I keep and which one do I throw out? Most students would say pick the one with the highest T statistic and the highest correlation. That's not the answer. The other variable does have statistical significance, but not as much as the other, but the other one's been cited the most in industry and academic research over time. It's theory, okay? It's theory. So you rely on the theory, okay? And you're gonna need, if you have an opportunity to do any of this stuff, you're going to do the presentation in front of the board of directors, the investment committee, and senior level managers. They're going to ask you how you derived the model, where you got the data, did you back test it, where were the sources, where did you get the ideas, what industry research reports did you read, what academic journals did you read, and you should be citing those journals and citing those reports off the top of your head, just totally defending yourself, because they're going to come after you. And if you can't defend yourself through citations of other work that other people have done, they're going to blow you over, okay? No, I don't know doesn't work, okay? You got to be decisive, answer those questions, and convince these people you know what you're talking about. And if you can show the back test and the front test that it works, and you make the recommendation and it's right, your career is going to take off, okay? People are going to come get you and put you on teams to work with, and then you'll work your way up. And you'll become an executive overseeing your own division, maybe your own companies. So internal validity is basically you're working with people within the firm, you're getting buy-off by everybody in the firm, the model looks good, the data looks good, the results make sense, so you're ready, you're getting validation from internal experts within the company. And then external validity is the model that I used and the variables that I used is consistent with external industry and academic research, okay? So again, that's the external validity. Unsystematic risk and systematic risk, I got, here's a graph. I got portfolio standard deviation on the y-axis. I got the number of securities that I put into the portfolio. On the x-axis, as I start to add more securities to the portfolio with no low and negative correlation, the unsystematic risk component comes down and reaches an asymptote, basically a limit, okay? And the only risk that's left is the systematic risk. And that's reflected in the beta calculation, and I'll talk to you about that later. So you can't diversify away market risk, economic risk, political risk, geopolitical risk. We can't, as managers, it's hard for us to manage political risk and economic and I can't manage the coronavirus. I can't manage, trade talks with China. I can't manage political outcomes at the, the congressional level or the president's. I don't have influence on that stuff. So I have to do the best I can to learn about it. And as a fiduciary, I need to advise my clients that these are the risks, and we're doing everything we can internally and through our systems to be able to mitigate the damage either of the event or the expected event that's going to come due. For example, I had done a presentation to a group of real estate experts. I didn't have a lot of time to work on the presentation, so basically I had to pick who I thought was going to win the presidential election, and I thought it was going to be Hillary Clinton. So I'd done all this work, I had it all ready, I had it printed out, I had it where I was going to go to bed, and then just sleep, wake up, and my presentation was going to be done, woohoo, and go do the presentation in front of these people. Donald Trump won. So I had to go back and redo the presentation under a Trump scenario with all the policies, and then make that presentation. So I was working all day to kind of clean that thing up. So we do the best we can. What type of risk can you diversify away? Unsystematic. The next, on page 10, you got a balance sheet. Show me the balance sheet. Show me the line items on the asset side and the liability side. Remember, to manage a company, you want to match the economic life of the assets with the maturity of the liabilities. It's called asset liability matching. Okay? You don't want to raise, short-term notes to finance, plant and equipment, right? You don't want to raise long-term bonds, to use as working capital, for your inventory. You want to match the economic life of the assets with the maturity of the liabilities. Okay? So short-term, medium-term, long-term. And then obviously on the liability side, on the long-term side, you got long-term debt, you got owner's equity, retained earnings, over on that side too. Okay? So show me your mathematics, or show me your financial accounting, and then corporate income statement. You're going to be probably doing budgets. You'll probably be called in to sit on committees or teams to evaluate the acquisition of other companies, maybe to launch advertising campaigns or marketing campaigns or IT projects. You're going to do IT implementations. You're going to have to project out what the expected benefits or income are going to be from those projects or those acquisitions or those investments. And you're going to take out all the expenses you need, and you're going to get to the free cash flow. And you're going to figure out how much it's going to cost and what the cash flows are going to be, over the life, of the asset. And you're going to discount all that stuff back, and you're going to calculate the net present value. And if it's positive, you do it. If the internal rate of return is higher than your discount rate, you're going to do it. So you're making investment decisions, but you got to understand what an income statement is, and you got to be able to project it out into the future as a pro forma income statement. Okay, and if you're doing that stuff, it's freaking awesome. Working with companies, Bio-Rad, who's buying up all these, tech startup companies and smaller publicly traded companies, and you're on the mergers and acquisitions team, evaluating these company acquisitions, looking at everything from the marketing, to their IP, to their patents, to their everything, and trying to figure out, should we buy this company? That stuff is really super fun. And then the cash flow statement, okay, sources and uses of funds. Were you using, cash from the sale of an asset? Were you using cash raised, from the bonds and the bond market? Where are your sources and uses of your cash coming from? How are you using it? Okay? And then the key financial ratios. These are the key financial ratios that I look at when I'm evaluating companies, and I'm comparing the ratios for the company with the direct competitor, the peer group, the industry, to come up with an overall financial position and condition of the firm, which is the first step in fundamental analysis when you're looking at a company, to come up with the value. Should I invest in the stock? Should I buy the company? So you gotta conduct, these are the financial ratios. So return on equity is the number one. Return on assets, the debt to equity ratio and debt to total market cap are your leverage ratios. Is the firm over or under levered? If it's under levered, we can lever it up, juice the ROE, and increase the stock price. Awesome. Is the company over levered? Uh-oh. They've already juiced the ROE. What happens if we go into a cyclical downturn and all of a sudden they don't have enough cash flow to service the bonds, they default on the bonds, the bondholders sue the company, force them into bankruptcy, liquidate the assets so the bondholders get their money, but the stockholders get nothing. Okay. So the leverage ratios are important. The price to earnings ratio, the stock price divided by the earnings per share, okay, is the multiple, the price earnings multiple. That one's really good, because if I can forecast the multiple, I can apply my projected earnings per share by the projected PE multiple to get the value of the company or value of the share. Okay. Earnings per share. I'm going to forecast what the earnings per share is going to be. What's the earnings projections divided by the shares outstanding? How many shares are going to be exercised over the next year because we granted stock grants and stock options, and there's a certain amount of employees that are going to be vested, and they're going to be exercising their options, and it might be dilutive on the earnings per share, so we need to know that. The weighted average cost of capital. What is the capital structure of the company? How are they financing the company from the liabilities? How much is short-term, medium, and long-term debt? How much is equity that they're using? There's an optimal capital structure to finance the assets that maximizes the value of the company. So the weighted average cost of capital is critical from that standpoint, but it also is used as a discount rate to discount future cash flows to the present, to calculate the net present value and the internal rate of return to make investment decisions. So publicly traded companies, we calculate their weighted average cost of capital, and then we plug that into the discounted cash flow model to then get the net present value, internal rate of return to make investment decisions. Okay, so it's really important, and I'll walk you through that. Then the capital asset pricing model. You got to memorize that. That actually gives you the expected return on the equity as from an investor standpoint, and the same equation from the firm's view gives you the expected cost of the equity. And actually the CAPM calculation plugs into the weighted average cost of capital calculation. So they're all kind of related to each other. And then you're going to learn the perpetuity model. And perpetuity is easy. It's whatever the cash flow is divided by your expected return, you're going to get a value. Gordon growth, whatever your cash flow is you're using, divided by your expected return minus the constant growth rate gives you a value. The multiple approach, you get your cash flow metric, divided by some multiple, gives you the value of the company or the share. And then the discounted cash flow, or the DCF method, you project out the cash flows. You discount them back to the present, and you calculate, that's the present value of those cash flows. That gives you the value of the company and the shares too. And then we build on it, we do case studies. So that's basically the pre-test. And how much time do we have? 25? Okay, cool. Let's do the syllabus really quick. I should be able to get it. All right? Everybody got the syllabus? Yeah. Awesome. Everybody okay? You need a donut? Sure. You want one? Oh, hey, we should wait right there. There.
Oh, but that's
I'm just offended. Okay, Eileen, what kind of maple donuts do you like? You're getting one. I know.
with bacon.
So Eileen, what kind of donuts do you like?
I like corn.
Oh, okay. Maybe I can get there early and ask them for like the custard in there, more chocolate or something. But a chocolate infused maple bars. I'd have to pay them all. All right, so let's go through the syllabus really quick. So we know what the book is. And again, did I already give you the strategies on how to deal with the book? You can share it, you can buy it, you can rip it up, you can like buy the press, you can share it around, you know what I'm saying? And I have a lot of stuff, on the website too, okay? So however you want to do it, it's a really good book. And the Wiley Plus is cool because they have narrated PowerPoints. So if you want to listen to how they present it before you present it, you can go listen to it. And they have narrated videos and stuff on the problems and the homeworks and stuff like that, which is really cool too. Okay. The problems are not hard. They're not. I mean, we're not doing quantum physics calculations and third semester calculus. We're not doing that stuff. I mean, finance is not that sophisticated. It's only when you start getting into quantitative finance, and financial econometrics, where all the physicists, PhDs and physics majors go do a master's in financial engineering at Cal and they go work for Goldman Sachs or some hedge fund. That's when you kind of get into that stuff, but this is first class. But if you guys want to learn about that stuff, I'm more than happy to guide you and walk you through that stuff, okay?
Would you say that PowerPoints cover,
There's usually too much content in the original
in the
PowerPoint.
full chapter, I mean like, yeah, like the intro and all that stuff, so would
And
you
it's
say that-
redundant too, so
Yeah,
you
so
can
would you
just
say your
stream it.
PowerPoints, like, if you're going over them and then we watch the class presentations, that's.
Yeah,
solid.
I mean, just going through the PowerPoints and then just editing them down because a lot of stuff is redundant.
Gotcha.
And then really forcing yourself to get to the 15 minutes. So each of you has 5 minutes to do a section. So it's all doable. And you're really gonna learn the material, okay? Then having me present it and go through it, you're gonna pick up like 10% of it. If I did it, you're gonna pick up 100% if you do it. So that's kind of why I do it. Plus it's fun. People love to see their students do presentations, watch them, learn from them, and encourage them and support them, in their efforts to transfer knowledge, okay? And then here's all my companies that I work for with the websites, if you wanna go up there and check them out. I basically run my academic program, 3 colleges, 190 students. I have basically a stable of 5 to 7 TAs that I work with that I've trained that have all been through my classes. So when you give me the deliverables, we all work through them, we give you comments, suggestions on how to improve your product, and then you go back and correct it and resubmit the stuff that it's deficient, and then you get to the A, okay? So that's kind of that. But I got some cool stuff that I'm working on. If you're interested in doing any research with me, or you want to work with me, or you're looking for a job or anything, I'm more than happy to work with you on your resume, get you coached, and put you in front of my contacts to place you. Okay, you just got to want to do it. And then here are the milestone dates. Right here at 2. Here are my office hours. Again, if you text me, call me, I'll totally respond. If you email me, I'll get back to you at some point. And then you can come see me. I'm usually here early because I don't like to sit in traffic. So I get up at like 5 or something, and I'm here by like 6:30, maybe 7 at the latest. And then I usually have some calls, maybe sometimes at 8, or 9 with my clients. But I'll still meet with you. You can actually even sit in on some of the conference calls and listen in on how I conduct my business, so you can hear the language and the level, in which we communicate, which I think is really valuable. If you don't have that experience, I'm more than happy to provide that access to you. Contact information, accommodation for anybody that needs accommodation. I'll totally accommodate you. Again, and this gets to, like when we do the exams and stuff, it's like you don't need to cheat in my class. There's no incentive whatsoever to cheat. in the class. You need more time to study, take the time to study, come back, take the exam, when you can, do the best you can. You need more time, make an appointment with me, I'll get the exam back, you fill out the exam. You come in, the exam's gonna be over 2 days, Tuesday and Thursday, so you get to study Monday night, you come in, you take the exam. Professor Souza, I gotta be honest, I haven't studied, great, give me the exam back, go study, come back on Thursday. Oh, Professor Souza, I need more time, I want to be in my office at 7 o'clock on Friday, won't you come back on Friday, finish up the exam? Oh, I need more time, can I do it on Monday or Tuesday the next week? Yeah, go learn it, come back, take it. Okay, Professor Souza, this is the best that I can do. Great, let me take a look at it. I'll mark some areas that I think you need more improvement on. Go back and look at the videos to retrain, put in the detail, make the corrections in red or blue so you can show me that you did it. And then I'll take a look at it. It's like, oh, great, awesome, perfect, A. And then, oh, you're missing a few things. Once you come by my office, I'll walk you through it, show you where your gaps were. Boom, 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 A. Okay, so you're going to get it anyway, but you got to see me. You got to be engaged in the process, and it's repetitive, and it's an iterative process instead of and then student engagement. If you have any issues on anything, you can tell me, and then I'll accommodate whatever it is. And I'll totally support you in anything. If anything happens to you, or there's a situation or something, I'll totally back you 100%. Okay. If you need me as an advocate, or something you need me to advocate for you, I'll totally advocate for you. Okay. You just got to tell me what you need, and I'll go to bat for you. And then here are the prereqs. Okay. And again, there's review videos up there. Could you put the grades for your prereqs on the back of your test, so I can at least take a look at it and know where your weaknesses and your strengths are. Okay, so I can kind of have a good feel for where you are. And again, you're going to get a good grade, but you're going to forget this stuff, right? So a lot of the stuff that we do in here is reinforcement, and then provide you with training videos to reinforce any of the areas that you think you might be weak at. Okay. All right. Just trying to help. And then, talking about the cheating stuff is really funny. It's like I had some of my students that were taking the exam, and they had their phone there, and they were basically writing the answer from the stuff like that I did. They had pictures, and they were writing out the exam stuff. It's like, you don't need to do that. Just go study the stuff. Don't put me in a position, where I have to catch you. And like, what am I going to do? What do I do? You ruin my career by having me turn you in, and you ruin your career by having me turn you in. It's like, don't do that. Just, if you have problems and stuff, let's work it out. Just don't do it. Just, do it in your cheat in other classes. Don't cheat in my class. It's not worth it, and I'll be totally cool, if you need more time. And then you guys are really good. I don't think I have anybody who's got ADD and is addicted to their phone, where they need to be looking at it all the time. That's really cool. And I appreciate the respect on that. And then the course description. I really wanted to try to gear this course away from mechanistic approaches and more toward production and quality orientation, more modeled after an Ivy League type of approach where I transfer the responsibility of the course onto the student, which gives you the self-efficacy and the self-confidence to take responsibility for your own education, so you get more value out of it, as opposed to looking to me to provide you with all the solutions. Okay, and it's just a better approach. So please read, page 5. It kind of lays out, what the goals and objectives and the learning outcomes are for the class. Starting at the bottom of page 6 and through to page 7 and 8, and through to page 7 and 8, kind of lays out the knowledge for most chief financial officers, and most chief investment officers. And even the CEO and the president of the company knows this stuff too, because a lot of them came from finance and capital markets or investment banking and then worked their way up into the chairman position or the president position or the CEO position. So, read through that. You're gonna be learning a lot of that stuff. And we'll be, applying, some of the theories, such as the yield curves. I'm a big proponent of learning yield curve theory. Because it was really funny. It was like, I got all these phone calls from my students about a year ago when the yield curve inverted. And we had learned about that in this class. And the yield curve just inverted like 2 days ago too. So some things are going on. Okay. And then on page 9, we kind of lay out the course. I try to keep to this schedule, but please don't shoot the messenger if we need to go over, because I wanted to spend more time on finishing the lectures, for the quiz and get through the materials, which just gives you a little bit more time. And then here's the homework problems. You know where the solutions are. You need to have a cover page on the homework. Write out the solutions, learn the problems, staple it together. That'll be another one of the instruments within the deliverable package that's going to be due. And the deliverables are due like one every month, and they're going to get smaller and smaller and smaller as we move through the courses, because I want to take more of your time up front when you're all fresh, and then get it back to you at the end of the semester when you're more burnout and you got pressures from your other classes. And I try to alleviate that and give you some time, some resources to do well in your classes and get the, the 3.2 or 3.6 or 3.8, and really focus on your grades, okay? If you're at a 3.2 overall, make sure you get to at least a 3.6 in your major. And if you really love your concentration, you should be in a 3.7, 3.8 in there. And that's going to get you into an Ivy League or a really good grad school, okay? And the employers look at it too. But if you have kind of poor overall, but you did well in your concentration and your major and your concentration, then you list both, or you just get rid of the overall and you just, 3.6 in your major, 3.9 in your concentration. So you kind of play a little politics to make it look, better. And people get more motivated once they get into their major. And then the homework is assigned, and then it's due. Here's a bunch of videos that I brought up front to watch on product innovation and on yield curves. I really came to the realization that finance is just a technology that's really a process or a product that's developed and innovated in innovative companies. And then we basically solve problems, and then we deploy and execute on the process. Or we basically build the product and then make a market in those products as they become adopted, within the capital markets, solving people's problems. And I'll get into some examples of that. And then we have the quiz review. I'm going to check the pre-test on February the 20th. It's going to be due on the 27th with your first memo, and I'll go over the memos, the structure and everything. But there's some videos up there if you want to look at it first. Your first template memo will be due. If you're excelling at it and you're working with me and I'm going, this is really good, here are some suggestions. Let me show you how to edit, some of these things so you can learn my business communication editing style. This looks really good. You're ready to do oil. You're ready to do gold. And if you accelerate through that process, I'll be reading all of them, giving you feedback, and at some point I'm going, these are perfect. Just print them out in color, staple them, and stick them in your binder, and give them to me at the end of the semester. Okay, that's really the best way to do it. And I really have a hard time giving A's in the class when somebody just blows off the memos, because they're really important to me as a communication piece. It means that you don't care about the communication, writing. You think you did all this other stuff, but the memos are going to be what you're showing your employer, and that's really what's important. And then the homework's due on the 5th. Again, cover page. I'm going to check, I believe, do I check the homework? No, I'm going to check the homework, make sure everybody's on track, right? And then what I do is I give a green circle if you're nailing it, if it's beautiful, you're good. Blue needs a little bit more work. Red, you're just like throwing stuff on a page and hopefully thinking that I'm gonna say, oh, this is good, or I don't know what you're thinking actually. Sometimes, some students. And then the deliverable package is going to be due on the 12th, okay, the goal cover page, we'll clip together all of your instruments, and then me and my team will basically review all of those things. We'll grade the stuff that looks good, you know, we'll not grade the stuff that needs more work, and then you'll basically give me the stuff that needs to be reworked so that, you know, you're up there, and if you need a little bit more time or a little bit more work, I'll work with you, okay, to do that. Because some people learn, you know, at different speeds, and then it takes a little bit different time, right, to get ramped up and stuff like that. So I don't want to stigmatize you or anything, I just want to encourage you and work with you. And then on the 19th of March, the oil and the stock memos due. And then I assigned homework 2, and as you can see, homework 2 is a lot less than homework 1. So we're starting to ramp down. Once we get through the first third of the class, then it's like, whew, yeah, okay. Now, you know, you're coming off the top of the roller coaster and starting to, you know, come down and get a loop for the home stretch. And then memos, spring break, wahoo, right? Right? Maybe New Orleans, Fort Lauderdale, Vegas, right? Don't forget to give yourself a couple days to dry out before you come back. And then when you come back on the 16th of April, your homework will be due. Then on the 23rd, week of the 21st, 23rd, we'll do the midterm. It's all problems, okay? So I'll walk you through all the problems. We just do problem, case study. How do we underwrite and value a startup company, an established tech company, a real estate investment trust, a development in Mission Bay, a Salesforce tower? How do we value a REIT security? So it's all case studies that I've written to just, you know, grind into you know, the valuation process. And then as you can see, by April 28th and 30th, your homeworks are slimmed down. Your final is basically 3 problems taken from the midterm, and maybe the quiz, just only 3, and you've already done it. Okay, so basically the final's super easy. I learned over the years that you know, do not give final exams in the final period, you know, in the final week of school, okay, to my students. It's the worst thing it's ever happened to me. I mean, I got students that are crying, you know, they're sweating, the blood has been drained from their head, they come in angry, they leave angry, you know, it's like, forget it, I'm not gonna do that anymore. You know, the first half of the final night, the day, what did we do last time, James? Watch some surfing videos and listen to some Gen X boomer, you know, rock and roll. I did an exit lecture for about an hour, and then we were out of there like a half hour early. And then we all met up that Thursday from 2 to 4 at the Metro to, you know, drink beers and eat burger and stuff like that. Just kind of a way to cap it at the end. Okay. So everybody leaves pretty much happy. And then the following week, we're going to, I don't know, do you want to do, anybody have a bank they want to do? Goldman Sachs, JP Morgan, Citigroup, Wells Fargo. Want to do Goldman Sachs? I mean, the top 5 companies are the top, you know, financial institutions in the world. In the United States, they control over 50% of the assets in the banking system. These are the best run companies, you know, in the world. Goldman Sachs is really good. JP Morgan's the best. B of A is really good too. So I don't know, if you want to pick one, great, or I'll just pick one. Yeah, JP Morgan's awesome. You know, it's easy to do the valuation. So I'll go through the valuation, provide you with everything that you need to put together the deck, and then we'll come back. You know, I'll work with you on the deck, you know, through Google, what's it called, presentation, or yeah, Google Slides. We'll be working together, we'll get it beautiful. And then, you know, once I sign off on it, you'll run to the print shop and get it bounded and printed, and then the leader of the team will submit it in their last delivery. Okay. So you walk through the same way. So that's basically it. So that's kind of the class. Okay. Is that going to work for you guys? Yeah. Thanks for sticking with me. I think you'll have fun. I'm not going to kill you. Just let's be friends. Let's work together.